Welcome to the deep dive. Today we're plunging into the world of macro investor Raoul Pal and his pretty compelling view of the next few years.
That's right. We've been digging into excerpts from his research, specifically looking at his investment thesis for, well, 2025 through 2030. He talks about some really big ideas like the everything code and this concept he calls the economic singularity.
Yeah, those sound significant. So our mission here is pretty straightforward. We want to, unpack these ideas, make them simple.
Get to the core arguments.
Exactly. Pull out examples from what he's actually written and figure out what it all might mean for you listening, especially looking at the next decade or so.
It's really about getting you up to speed on his framework quickly, because it is quite influential, you could say.
It definitely seems like a different way of looking at things, a mix of tech, finance.
And even human behavior, all converging pretty rapidly. It's fascinating stuff.
Okay, let's unpack this then. So the heart of his framework is this thing called the everything code. What's the simplest way of what is that?
Okay, so basically he argues that the biggest force moving asset prices today isn't necessarily old school stuff like company profits or GDP growth on its own.
Right. Not the fundamentals we always hear about.
Not primarily. He says the overwhelming driver is global liquidity, just the sheer amount of money flowing around the global financial system.
Just cash sloshing around. I think I remember a quote from him on this. Pretty blunt, wasn't it?
Oh yeah, very direct. He basically sums it up as liquidity in, I buy it, you make money. That's it. He really believes understanding that flow, that liquidity, is the key.
The key to everything, hence the name.
Exactly. The code is his way of explaining why the liquidity is flowing and, where it's likely headed.
Okay, so let's break down that why. Why is the liquidity in? What are the key parts of his code? First piece.
First big one is currency debasement. Powell points to this long-term trend where central banks globally are essentially devaluing their currencies.
Making money worth less over time. Why are they doing that?
A huge factor is debt. Massive global debt, government debt, corporate debt. When debt is that high, it's really hard for central banks to jack up interest rates without causing chaos.
Yeah, it breaks things.
So the easier path, often, is to inject more money, print more, create more digitally. It devalues the currency, which makes the existing debt pile feel a bit lighter, relatively speaking, over time.
Okay, so more money creation dilutes the value. Got it.
Precisely. And that constant injection of liquidity means that money has to go somewhere. It searches for assets. Anything that can grow faster than the money itself is losing value.
Which leads to the next bit, the business cycle and liquidity.
Exactly. Powell shows this really strong link between the global money supply, specifically M2, which is like cash, checking accounts, easily accessed money, and how risk assets perform. Think tech stocks, crypto.
So M2 goes up, risk assets go up. Is it that direct?
Historically, he shows it's a pretty reliable relationship. When global M2 expands quickly, these riskier assets tend to really take off. He even connects it to traditional indicators, which is interesting.
Like what?
Well, the sources mentioned he uses the ISM Manufacturing Index. That's a standard gauge of economic activity, right? He shows how its ups and downs often correlate surprisingly well with Bitcoin's price.
Huh. So when the economy looks like it's expanding according to that index.
That's usually when liquidity is flowing strongly, and assets like Bitcoin tend to get pushed higher. This is a concrete example he uses to show the code playing out.
That is interesting, tying a traditional measure to crypto. Okay, what about the other parts? Demographics and productivity.
Right, these are maybe slower moving forces, but still important. Demographics, specifically aging populations in developed nations, tend to mean more demand for social spending, pensions, healthcare.
More government support needed.
Yeah. And that puts pressure on central banks to, well, keep the money flowing, keep rates relatively low. It makes it politically harder to tighten the screws too much when lots of people rely on fixed incomes or government help.
So another reason for more liquidity, structurally.
It's kind of baked in, yeah. Now, potentially counteracting that, or maybe adding another layer, is productivity from new tech. And that's the fourth piece, the technology adoption curve.
Ah, the speed of tech.
Exactly. Powell argues that tech, like crypto, and especially AI, are being adopted way faster than previous technologies. He specifically compares crypto adoption now to the early internet.
But faster.
But potentially on an even steeper curve, yeah. exponentially faster.
So this rapid adoption isn't just cool tech stuff, it actually directs where all that liquidity rushes.
That's the argument.
Hmm.
This rapid adoption creates huge growth potential, making these sectors super attractive for all that money that's trying to outrun currency debasement. So the everything code is his lens for seeing markets. Not random noise, but flows driven by liquidity, shaped by debt, central banks, demographics, and then turbocharged by tech adoption.
It all comes back to the money flow.
Liquidity in, find the exponential growth. That's the core idea.
Okay, that framework makes sense, like the why. But then he uses that to paint this really, really big picture of the future, right? This economic singularity.
Absolutely. That code, that framework, leads directly into his forecast for this massive shift he sees coming around 2030, the economic singularity.
Okay, singularity. Sounds intense. Is it like the robots take over, end of the world stuff?
No, he's clear it's not necessarily dystopian like that. It's more about the speed and the sheer scale of technological change hitting a point where it just fundamentally rewrites the economic rule book.
A point of no return,
In
almost.
terms of how the economy functions, yeah. And the main driver he points to,
Let me guess. AI.
bingo, artificial intelligence, particularly the push towards AGI, artificial general intelligence. That's AI that can basically learn or do any intellectual task a human can.
Yeah.
He calls it, get this, the single greatest innovation of humanity ever.
Wow. That
Yeah.
statement, what does he actually see AGI doing by 2030 that causes this massive shift?
So his prediction, based on sources, is that within about 6 years from, say, early 2024 or 2025, so, late 2020s, AGI power just explodes upwards while the cost plummets.
Cheaper and way more powerful AI.
To the point where he talks about introducing the equivalent of infinite knowledge workers into the economy.
They need knowledge workers. You mean AI doing complex thinking jobs, analysis, coding, basically for free?
That's the idea. Imagine high-level cognitive tasks becoming almost zero cost, instantly scalable. He argues this just fundamentally changes everything. GDP calculations, how fast businesses are born and die, and obviously the whole nature of human labor.
That sounds like it could be amazing for productivity, though, the golden age aspect.
That's definitely the upside he stresses. If intelligence itself becomes cheap, innovation could accelerate like crazy. Progress in science, medicine, everything could go exponential.
Okay, so this huge, potentially disruptive, potentially amazing change is coming so fast. Like 2030 isn't that far away. What's the message for people now, for investors?
Yeah, this is where it gets really urgent. He sees this current period, the next few years, as this incredibly important, maybe limited window of opportunity.
A window before the rules change completely.
Kind of.
Yeah.
He's quoted saying things like, we have 6 years to make as much money as possible, and that the entire game now is about positioning yourself to benefit from this exponential growth before the singularity hits and potentially makes a lot of traditional models obsolete.
So invest in the disruption itself. Ride that wave.
That's the core message. Invest in the technologies driving the change. He also touches briefly on the idea that society might split, between those who adapt and leverage this tech and those who maybe can't or won't.
Right. Okay, this is where it gets really interesting then. How does this big picture, this coming singularity, shape his more immediate predictions, like for 2025?
Yeah, so building on that whole framework, his outlook for 2025 is, generally speaking, pretty bullish,
Yeah.
especially for crypto and tech assets. He even has a name for a phase he expects in crypto, the banana zone.
The banana zone. Okay, is that as crazy as it sounds?
It basically means a period where he expects potential exponential price growth. Charts going almost vertical, looking like a banana.
Right. Okay. And he has some specific, pretty wild predictions for Bitcoin in 2025 based on this.
Yeah, they're definitely bold. The sources mentioned ranges from around $210,000 up to potentially over $805,000 for Bitcoin by 2025.
Whoa. Okay, those are huge numbers. What's driving that, according to him? What makes him think that's possible?
Well, first, it goes back to his core thesis, returning global liquidity, the liquidity in part.
More money flowing.
Exactly. He also looks at historical patterns, comparing it to past bull runs like 2017. But a key factor he highlights now is the launch of the spot Bitcoin ETFs in the U.S.
The exchange-traded funds. Why are they such a big deal?
He calls it a pivotal moment because it provides a regulated, easy way for huge institutional players, pension funds, endowments, big money managers to finally get exposure to Bitcoin. It's an on-ramp that didn't really exist before in the same way.
So opens the floodgates for big money, potentially.
That's the argument. It makes access much easier for massive pools of capital. But he's definitely not just bullish on Bitcoin. He talks a lot about the wider crypto space, too.
Right. He mentions Ethereum and Solana quite a bit.
Absolutely. He sees Ethereum, ETH, as kind of the foundational layer for DeFi, decentralized finance.
Hmm.
Lending, trading, all that stuff on the blockchain. He sees big potential for institutional use there, even calling ETH the Microsoft of the new financial system.
And Solana.
He points to Solana, SOL, as a leader among the faster, more scalable Layer 1 blockchains the network's applications get built on. He suggests SOL could even outperform Ethereum at times during the rally.
So a potential leader in the altcoin space.
Yeah, and he mentions watching others too, like keeping an eye on chart comparisons like SuXOL, looking at other Layer 1s like Suest. It suggests he expects a broader altcoin season.
Where money flows from Bitcoin into Ethereum, then into other coins.
That's the typical pattern he anticipates. Liquidity cascading down. He even throws out the idea that this whole bull market might last longer than usual, maybe extending into 2026.
Why longer?
His reasoning, mentioned in the sources, is that the previous period was quite stagnant economically, so maybe the recovery and growth cycle stretches out a bit more this time.
Interesting. What about tech stocks? Is he bullish there too for 2025?
Oh yeah. Especially companies involved in AI and what he calls the exponential age trends. The sources mention his exponentialist portfolio, which is specifically focused on capturing these disruptive tech plays.
And the macro factors supporting this in 2025. Back to the everything code.
Yep. He expects global M2, that money supply measure, to keep rising through most of 2025, feeding the liquidity engine. He'll watch the ISM index correlation. And he thinks inflation might stick around, maybe 3–4%, partly even due to the energy needed for AI development.
Okay, so the 2025 picture is optimistic for these specific areas, but there have to be catches, right? What's the big warning label?
Oh, absolutely. And he's extremely clear about it. High edge volatility, especially in crypto. He hammers this point home constantly.
Big price swings.
Massive. Up and down. He says you need real conviction. You need to be able to stomach huge drops without panicking, and definitely advises against using leverage borrowing to invest because the swings can wipe you out so fast.
Why is it so volatile, in his view? Is it just immature?
He sees it more as a natural feature of assets undergoing incredibly rapid adoption and price discovery on a global scale. There isn't the long history like with stocks or bonds. So yeah, you have to be prepared for sudden, sharp moves.
Okay. Definitely not for the faint of heart. So looking beyond 2025 then, out towards 2030 and the full arrival of this singularity, what kind of scale are we talking about?
This is where the numbers get really mind-boggling.
Yeah.
Looking out to the early 2030s, he forecasts the total crypto market cap potentially hitting $100 trillion.
Wait, $100 trillion? The whole market? That's astronomical compared to today.
It is. It implies just monumental capital inflows, mass adoption, way beyond anything we've seen. And based on that kind of overall growth, he's modeled potential Bitcoin prices reaching as high as $2.6 million per coin by the early 2030s.
Wow. Okay. And the AI side, how does that fully play out by 2030 in this vision?
By then, he thinks AI basically breaks the entire economic model.
Breaks it. How?
Well, remember the infinite knowledge workers. He sees intelligence and knowledge becoming almost free, universally accessible via AI. Automation hits hard, not just factories, but huge numbers of white-collar jobs, analysis, research, maybe even creative fields.
So massive job disruption.
Potentially, yeah. And the speed of business itself, creation, destruction, what he calls business velocity, just goes through the roof. It forces a complete rethink of work, value, maybe even human purpose.
If traditional jobs change that dramatically, where do people find economic opportunity or income?
This leads to a really interesting, maybe slightly unsettling idea he explores. The rise of a speculative economy.
A speculative economy, what does that mean?
The idea is, as traditional work changes, maybe people increasingly turn to markets, not just serious investing, but things like meme coins, meme stocks, prediction markets, NFTs, whatever, for income, for entertainment, maybe even for social status or community, as the old structures fade.
Wow. Speculation is a job almost. Where does blockchain fit in all this AI-driven future?
He sees blockchain as crucial, foundational even. In a world potentially flooded with AI-generated stuff, some real, some fake blockchain offers a way to verify truth, to establish digital scarcity, to prove ownership.
A layer of trust in a digital world.
Exactly. And cryptocurrencies then become a way to own a piece of that infrastructure, own those digitally scarce assets that might hold value when information itself is abundant.
Okay, so given that vision, the singularity, the speculative economy, AI, blockchain.
Yeah.
What's the core investment advice for the next decade?
It's consistent. Invest in the change. Don't fight it. Don't fear it. Invest in it. That means a heavy focus on the assets driving the disruption.
So primarily crypto and specific tech stocks.
Pretty much. His focus is clearly on crypto, Bitcoin, Ethereum, Solana, other layer ones he follows, and tech stocks right at the center of AI and these exponential trends.
And what about everything else? Traditional stocks, bonds, real estate?
He's pretty bearish on them, relatively speaking. He argues that in this increasingly digital world, assets without digital scarcity will struggle. He has a stark quote. In a digital world, everything goes to zero in value unless it has digital scarcity.
Zero. That's extreme.
It's provocative, for sure. But his point is about relative value shifting dramatically. His advice boils down to invest in technology, don't own any other stocks, own technology, and you will capture some of this.
Wow. So it's a really focused, concentrated bet on this technological future. The urgency seems key again here.
Absolutely. He frames this period, the next, say, 5 years leading up to 2030, as this critical window. He says things like, you have 5 years to make as much money as possible, and this 6-year journey is the most important time of anybody's lives. If you're open-minded, you're at least investing in this change, as opposed to fearing the change.
Gongxi.
It's about positioning now.
That urgency is definitely coming through, but obviously this whole outlook has risks. He must acknowledge those, right? What are the big ones?
Oh, for sure. He's very upfront about the risks. Number one, again, is that market volatility. We talked about it for 2025, but it applies long-term, too. Crypto especially. Huge swings. You need the stomach for it.
Okay, volatility. What else?
Regulatory uncertainty. Big one. Governments are still figuring out how to deal with crypto and AI. New rules could come in that really change the game, positively or negatively. It's a major unknown.
And the dark side of the singularity itself.
Yeah, the technological disruption and job displacement. If AI automates jobs faster than society can adapt, you could see significant social unrest. Inequality. That's a huge societal risk tied to this thesis.
Very real. What about just picking the wrong horse?
Right. Execution risk. Even if the broad themes are right, AI is big, crypto grows, picking the specific companies or coins that will be the long-term winners is incredibly hard. Lots of projects will fail.
Any other big picture worries?
He does mention systemic risks. In a world so reliant on interconnected digital systems, the potential for massive hacks, cyber attacks, or failures in critical infrastructure becomes a much bigger threat.
Like hacking the financial system or something.
Exactly.
Yeah.
And also, the everything code itself isn't foolproof, right? It's a model based on current data and trends.
Could be wrong.
A major unforeseen event, a true black swan, or a fundamental change in how governments or central banks operate could break the model or make it less accurate. He acknowledges it's a thesis, not a guarantee.
And lastly, he talks about us, our own psychology.
Yeah, he really stresses this. He often says the biggest enemy isn't the market, it's yourself. Your own fear when prices crash, leading you to sell at the bottom. Your greed when things are rocketing, leading you to pile in riskily at the top.
So managing your emotions is key.
Especially in markets this volatile and fast-moving. He argues that emotional control and discipline are absolutely crucial to actually stick with a long-term strategy and not get shaken out by the noise.
Okay. So wrapping this up, what's the big takeaway for you listening?
Well, Raoul Pal is essentially painting this picture of radical, maybe unprecedented global change. It's driven by AI and crypto converging towards this economic singularity around 2030.
And his everything code is the why behind it, why he thinks global money flows will keep pushing into these disruptive tech assets.
Right, and the core message really feels like one of urgency mixed with opportunity. Understand the shift, consider embracing the potential in crypto and AI tech, but be very aware of the wild volatility and the real risks involved.
It seems to be about adopting a really long-term view, trying not to get caught up in the day-to-day drama, and positioning for what he sees as this massive generational shift before it fully hits.
Yeah, he makes a strong case that maybe the biggest risk right now isn't betting on this future and being slightly wrong about the details, but rather not betting on it at all, not being invested in the technologies that are fundamentally reshaping things.
Which leaves us with a pretty big thought to chew on, doesn't it? AI makes intelligence and knowledge almost free, and value shifts dramatically towards things like digitally scarce assets, certain cryptos. Maybe how does that change our basic ideas about work, about wealth, about what even has value?
And if that's the direction we're heading, how do you need to adapt your own thinking, your own plans for that kind of future?
Definitely a lot to think about.
For sure, as these trends just keep accelerating.
Thanks for joining us on this deep dive.